The European currency extended gains against the US dollar, hitting a fresh high at the level of 1.1050 mark. In the Asian session, traders continued to buy the euro as well. As for yesterday's fundamental factors, data on Germany's inflation met consensus estimates. Statistics on industrial production in the euro area turned out to be upbeat. Industrial production in the region was up by 1.5% from a month earlier in February, above market expectations of a 1% rise. Data on the number of Americans filing new claims for unemployment benefits proved to be rather gloomy. US producer prices unexpectedly fell in March. Against this background, sellers attempt to regain control of the market, dragging the price below 1.1010, but failed. Instead, the euro continued its bullish run. As for the British pound, the market saw a muted reaction to mixed statistics from the UK. The country's economy showed no growth in February. On a quarterly basis, gross domestic product grew only by 0.1%. UK industrial production fell and services output rose slightly in line with analysts' forecasts. This helped the pound sterling rise above the April high and continue its uptrend. Today's macroeconomic calendar is bereft of any important releases from the euro area. The focus of market participants will be on statistics from the United States. US retail sales are estimated to have fallen by 0.4% in March. That would follow a 0.4% decline in February, further evidence that inflation pressures are subsiding. This will allow the Fed to tone down its aggressive approach to interest rate hikes in May, which in turn support risky assets, including the euro and the British pound. Furthermore, traders may take notice of the University of Michigan's readings on consumer sentiment and expectations. If the indicators rise in line with economists' forecasts, the market will probably enter a correction in late trade. In the meantime, the quotes are likely to extend gains. So it will come as no surprise if the euro and the pound sterling hit new one-month highs during the European session. And now let's move on to technical analysis. According to the 1-hour euro-American dollar chart, it is worth focusing on the level of 1.1089. A false breakout at this mark will make it possible to go short, counting on a return to the daily low of 1.1047. If the price forms a false breakout at this level, a buy signal will be generated. In this case, the euro will most likely break above 1.1089. If the price consolidates above this mark and the way to 1.1125 will open at this level, I recommend going short on a rebound in the hope of an intraday decline of 25-30 pips. If the price retreats from 1.1047 amid strong data on the US economy, fixes below this level and tests it from the bottom up, the euro will enter a downward correction heading toward 1.1011. At this mark, it would be a wise decision to go long amid a false breakout. Long positions on the rebound will be relevant at 1.0972 to catch an intraday correction of 25-30 pips. Although the market is set for further gains, you should not rush to buy highs with no signals. It is too risky. After all, the asset is extremely overbought and a correction is long overdue. Speaking of the British pound, it is trading above the April high. The level of 1.2517 acts as strong support. A decline followed by a false breakout at this level will create a buy signal. In this case, the pound sterling will advance to 1.2556 and probably 1.2592. At the level of 1.2592, traders are recommended to sell the pair on a rebound to catch an intraday correction of 25-30 pips. Short positions at 1.2556 can be considered only amid a false breakout with a view to returning to 1.2517. If the price breaks below this level and tests it from the bottom up, the euro will come under stronger pressure and plunge to 1.2481. At this mark, it will be possible to go long on a rebound, counting on in intraday correction of 25-30 pips. Good luck and have a great weekend.